All right, good evening, everyone. This is Joe Henches with Beyond the Chart, and this is a market update for January 28th, Tuesday, January 28th. Start off with the Dow Industrials. The Dow was up 90 points today. A little bit of a bounce. 90 points sounds a lot bigger than the way it shows on the chart, that's for sure. But we got a little bit of a bounce and a couple sideways bars in here. Now, one thing I'm noticing while I look at this, we haven't taken out this point as I talked about on the weekend. So there really is still the possibility that this could turn around and break on higher here. I don't like the way it looks, and this correction has gone a lot longer than this correction went. So that makes me think something else is going on. But I still have to hold out the possibility that this could happen. Now, the other thing I want to point out is that this is down, you see these dotted lines, these are my Keltner Channels, and by the way, I did post an educational post out there on their Trader Education page where I talked about the Keltner Channels, and where you can see that it is pulled down here and closed below the Keltner Channel 2 days, then it's pulled back in, but it didn't pull back strongly yet, okay? Now, in December, it did not hit the Keltner Channels. In October, it barely touched. And in August, it kind of rode it down a little bit, but we got a little bit of this sideways kind of action like we're getting right now, a little bit of a pullback, almost to the 10-day exponential, and then another sell-off in here. And in the June sell-off, we barely touched it at all one day in terms of the Keltner Channels. And the last time we had any kind of riding down the Keltner Channels was October and November of 2012, where you hit, bounce off, come down and hit and ride it down for a little ways. So we're just not sure what's going on yet. What's the degree of correction that we're into? Are we going to get past this point? Are we going to bounce back up? To be convinced that we're going to new highs, we got to break this trend line here and push on up to new highs. So we'll have to kind of watch to see. The S&P 500 is similar type action. It did not go below this point. It got a lot closer. This was the low, 1767. The low yesterday was 1772. So still kind of a valid chance pulling back up. Although, again, I don't like the way this looks in terms of this broad correcting action here. The other thing, well, the NASDAQ pulled back to the 50-day moving average. See, yesterday and today. Okay, so we're basically riding the 50-day in here right now, kind of like right here. So it's going to be interesting to see, do we bounce on off of this or do we break on down through? And let's see, the New York Composite. The thing about the New York Composite is, again, we're right down pretty close to this December low. But you'll notice that this November low and December low on the New York Composite was right at basically this high. So this was resistance, now became support, and support. So if this takes out these points in here, which is really, I mean, what was the low? 99.20, 99.09. 99.25, 99.27. Well, what did I say the low was here? 99.09. And the low yesterday on the New York Composite was 99.35. So we're really talking about somewhere around 99.25. If we get a close below that, then this thing is breaking down. And of course, you got a trend line in here too. And this is a trend line extending back quite a ways. Probably could have even taken it back to this point here into mid 2012. So this is going to be real critical, I think, on the New York Composite. New York Composite, again, is broader than the S&P 500 or the Dow Industrials. So the transportation average, kind of a similar type of thing, although it doesn't look the same. It's not nearly like the New York Composite, but it is riding a trend line in here from October, November, and came right down to this point. And so we'll have to see. We're right below the 50 and right at the 50 today. So we'll have to see, do we, get support and come off? Again, this is kind of we're kind of right in this testing mode. Short-term trading index had a fairly low reading today, 0.64 bullish. I mean, that's a bullish reading, low reading. Anything below 1 is more to the bull side. And again, from a contrarian standpoint, the more extreme that becomes, the more bearish that, it's like that could be a peak, but that's not low enough yet. I mean, and then we get this 10-day pulling back down a little bit, so we'll just have to watch this to see if it gives us any clues. The VIX pulled back naturally because of the bounce, so the VIX pulled back down in here, but it was up above these Keltner channels at extremes. It could be just pulling back to the 10. We'll just have to see. And the high-low index is staying a little bit below, so we're still getting more new lows than new highs. So this really, kind of surprising. We had more damage, it looked like, that was occurring in December, although I think the pullback was stronger in October. So kind of a similar scenario that we've got that was going on in October. So again, it's going to be the test. Do we pull back out of this, or do we roll over? And there's really no way of knowing. So right now we're just kind of on watch to see if we push lower or bounce on up out of this. And the one last thing I'm going to mention tonight, because I've been watching this for so close. Let me look. Where is it? Apple. Okay, so this is what Apple did today. And we all know about it. I mean, everybody is well aware of what happened. So I had talked about this being a kiss goodbye in here up to the trend line after it broke this trend line. Been talking about this since November. My first post on this was November 10th. I called for it to move up into the 570 to 575 area. And it's taken a while to break down. It now appears to be breaking down. It broke through this point in here. The real question is going to be, do we continue to get follow through? Do we get any support at the 200-day moving average here? Or does it continue to follow through and complete what looks like a large rising wedge? And as I've always said, a rising wedge like this is bearish. This is an exceptionally large one. So if it does complete that type of trading pattern, that type of chart pattern, the completion of that is to the base, to the beginning of that at a minimum. Okay, and that's why I've been talking about Apple moving to 400. So we'll see. We'll see what kind of strength and what kind of move. We're at a little bit of an extreme here at the Keltner channels, below the Keltner channels here. And just like we were here, you bounced on up out of it. So we'll just have to see what, again, they rode the Keltner channels down over here, just as an example. It really is what kind of mode does the stock start to get into as it rolls over. So that's the scenario for tonight. I'll be back tomorrow night to kind of focus on the Chinese market. And this has been Joe for Beyond the Chart. Thanks for stopping by. And if you haven't signed up for email updates, please do that. Go over and click on that form, download my ebook. I think it's a great little read. It can really help you. It can't hurt you. That's for doggone sure. It can only help you. And sign up for email updates. So we'd love to have you do that. And have a great Wednesday. Thanks for stopping by.